Heidi ho, everyone, and welcome aboard. It is the final pre-US session for the week, and it's wonderful to have you on board. This is Geoff coming to you, and there's Ash.
Hey, buddy.
Yes, we need a camera, don't we? There you go. Let's make them
Hey.
all suffer.
How you doing, mate? Sorry,
All right.
I got a bit waylaid. You okay? You?
Oh yeah, come see, come say.
Frustrating, right?
Oh, one of those weeks, mate, where you just we're getting some reasonable results, but we've had some knockbacks as well. So
yeah,
no follow through.
As you say, mate, one of those weeks that they happen, don't they, every now and again? And
well, the good part is we got something going for us. The bad part is we had a few losers.
Yeah. Well, I guess that's the nature of the beast, isn't it?
SH1T happens, and the week's not over yet.
No, absolutely not. Well, I had to take profit on the dollar Swiss, and it might still be all right actually, but I had to take profit on in the end because it was one of those that exploded to the upside on the 5-minute chart, and one of the things I like to add to the journal actually is a velocity. Because this was the problem, and you've got to know what trend you're in, and it was a steep one, and actually this might still be all right, but because the movement to the upside was so steep, as soon as it started to come through these levels here, I had to come off, but it was still a decent trade. Ended up being near enough a 2.5 to 1. So not the worst thing in the world. I took it all off in the end instead of just taking some of it off because things just started to change just a bit too drastically, and that's the problem, isn't it? When you get a move like this can be followed with a move like that, and because I always use a soft target, I knew that this area could well be problematic, and it's proved to be the case. You see it better on a. Actually, you do see it better, probably better on the hourly, but you can see that there's a little low there, and these areas of the high there that was struggling to get through.
All I can see is you. I can't see your chart.
Oh, sorry, mate. Okay, that's my fault. That is my fault. There we go. Yeah, so it still looks okay, and it probably will get up there, but it was the velocity of the move just kind of dictated that I have to, that's the way I play it. I always trail a stop a little bit tighter if things explode, and that is what happened. So as I say, I managed to get a 2.5 to 1 out of it just on the 5-minute chart here, as this started to go and go and go and go and go, but it was, this first one was okay, but then had to move stops to that particular point. So it was about, as I say, it was about a 2.5 to 1. It was
nothing wrong with that.
No, not at all. I'm not too annoyed about it. It's one of those, but it still might go, as I say. I mean, there still might be an opportunity here. The thing with it is that I was also looking around with the S&P and the FTSE as well, and all of them had a little bounce. And the thing is, the FTSE is bouncing on quite an important level down here. It really does need to hold this point. Now, I would like to get back into the FTSE, but I'm just kind of seeing where I can do it, and it might be around this area. But we could get a bit lower. The FTSE's in a bit of trouble down here, I have to say. Same with the Nasdaq and the S&P. When we look at the S&P, this does suggest lower prices, and because of that, I don't really want to get into the FTSE at this particular stage because I think there could be some lower coming. The weekly pivot may well hold this up, so we might start driving to the upside. But if we consider the longer term timeframes, the monthly, last month did suggest there could be a pausing here, so it wouldn't be that much of a shocker to at least see us test these lows down here, and possibly a little bit lower. So if that doesn't happen, I think we're going to get plenty of time as a signal. This is the Nasdaq, similar looking bar from last month. This weekly bar currently isn't looking too healthy either, and it's got a little bit further to run to the downside. We can see that there's a little trend line that's going through there, that's just holding this the price up right now. Small little bounce there. Doesn't look like that much of an attractive prospect to me. So I am waiting on the Nasdaq to come down a little bit further. The DAX also printing what looks like a head and shoulders pattern up here. So all of them are looking a bit negative right now, mate. It does kind of suggest that we could get something fairly deep going on in the global equities. It's we've had a very healthy run to the upside. Well, in some respects, an unhealthy run to the upside because it just hasn't come back and tested. Now, there's no reason at all at this stage that this can't come back to here. Technically speaking, if it starts to break through these lows, we may well have a really big drop to the downside with global equity. So I think the best thing to do is keep the powder dry and wait for a genuine turnaround. What that comes in the form of is the big question. What's going to get this market now to switch in the other direction, and haven't really got an answer for that. So,
well, the sentiment seems to be very, very fixed for the day. In risk off, I'm seeing that all over the place.
Yeah, do you know? And this is one of the reasons that I was quite keen to just slide stops up fairly tight on the Nasdaq, because not on the Nasdaq, sorry, the dollar Swiss. The problem is that the Swissy does tend to be a bit of a safe haven, and yeah, PL
didn't do me any favors.
No, well, it's it's up against the dollar, and I suppose the dollar for some reason is strengthening. Quite.
CAD. I was trading the CAD Swissy long, and that's
right.
crashed.
The CAD Swissy, yeah. Well, this is the thing, isn't it? I mean, the Swissy
one's
does appear.
One's risk on, one's risk off.
Yeah, absolutely.
The result when we go risk off of that.
Yeah, that's the environment we're in right now.
Mm-hmm.
Let's have a look at the dollar yen. A little boost to the upside with the dollar yen, but I suspect the euro yen is probably in a bit of trouble.
Don't talk to me about euro yen. That was
all right. I won't bring that one up. Let's look at the pound yen instead, mate.
No, don't talk about that one either.
Okay, let's look at the Aussie yen.
That one's okay.
I mean, that one. Look at the expression on that one. It's in all sorts of trouble. So looks like a pretty strong signal for a risk-on environment. Now I don't know how long it lasts, and that's the trick, isn't it? How long this one can last?
Yeah, look, as soon as I see some meaningful support, I'm going to be an Aussie buyer.
Okay, you like the Aussie?
Mm-hmm. Well, I see no reason not to, and I'll share that with you in a minute.
Yeah, let's have a look.
No, not ready. Yeah, okay, hang on 2 secs. Let me see. It was actually this that was brought to my, well, it wasn't brought to my attention. I went searching for it, of course. Hang on, I'll try and share with you. There we go. Now, this was the statement by Philip Lowe, or the speech by Philip Lowe yesterday. Philip Lowe, of course, those of you who don't know, is the governor of the Reserve Bank of Australia. And really, I won't read it all to you, but he made some salient points. And this little paragraph here was interesting. Today, I would like to talk about the recovery and 4 interrelated factors that will shape it. That's the recovery of the economy, of course. These are: 1, how successful we are in containing the virus. That goes without saying. 2, how effectively we deal with the shadow of the very uneven recession. 3, how willing people and business are to draw on their accumulated financial buffers. And 4, economic policy, including monetary policy. So I'll skip to 4, right, because that's the one that interests us in terms of really what the market's going to think. So let's skip through all of those charts and go to number 4, if I can actually find it. Yeah, this is it. The board will not be increasing the cash rate until actual inflation is sustainably within the target range. It's not enough for inflation to be forecast to be in the target range. While inflation can move up and down for a range of temporary reasons, achieving inflation consistent with the target is likely to require a return to a tight labour market. On our current outlook for the economy, which will update in early November, This is still some years away, so we do not expect the increase to be increasing the cash rate for at least 3 years. Well, surprise, surprise, surprise. Everybody knows that, and every Reserve Bank is in the same boat. He then went on to talk about turning to the broader policy question. We have been considering what more we can do to support jobs, incomes, and businesses in Australia to help build that important road to recovery. The options have been laid out in previous speeches by the Deputy Governor and myself, and I don't plan to elaborate again on these today. While the board has not yet made any decisions, there you go, I thought it might be useful to close today by highlighting 3 of the many issues we are working through. The first is how much traction any further monetary easing might get in terms of better economic outcomes. When the pandemic was at its worst and there were severe restrictions on activity, we judged that there was little to be gained from further monetary easing. That was a while back, 7 months ago. The solutions to the problems the country faced lay elsewhere. As the economy opens up, though, it is reasonable to expect that further monetary easing would get more traction than was the case earlier. In other words, they're considering it. A second issue is the possible effect of further monetary easing on financial stability and longer-term macroeconomic stability. This is an issue that we have paid close attention to in the past when we were considering reducing interest rates in a relatively robust economic environment. It remains an important issue today, but the considerations have changed somewhat. To the extent that an easing of monetary policy helps people get jobs, it will help private sector balance sheets and lessen the number of problem loans. Tick for the people who think they're going to cut. In so doing, it can reduce financial stability risks. This benefit needs to be weighed against any additional risks as people take more investment risk in the search for yield. We also need to take into account the effect of low interest rates on people who rely on interest income. That's a cross for reducing interest rates. The third issue is what is happening internationally with monetary policy. Australia is a mid-sized open economy in an interconnected world. So what happens abroad has an impact here on both our exchange rate and yield curve. In the past, the interest differentials provided a reasonable gauge to the relative stance of monetary policy across countries. Today, things are not so straightforward, with monetary policy also working through balance sheet expansion. As I noted earlier, our balance sheet has increased considerably since March, but larger increases have occurred in other countries. We are considering the implications of this as we work through our own options. So these are three of the complex issues we've been considering at our recent board meetings. The board will continue to review these and other issues at our upcoming meetings. We are committed to do what we reasonably can with the tools we have to support the recovery of the Australian economy. Nowhere do I see that they're going to cut interest rates to 0.1%, nor do I see a commitment by the Reserve Bank of Australia to cut interest rates at all, full stop. He's saying that they're tossing up and down and they really don't know which way they're going to go, if any way they're going to go, because they're taking a balanced approach. Okay, it's good for one, it's bad for the other. Tick, cross, tick, cross. Ash, what am I seeing? What am I not seeing that other people are seeing here?
Well, do you know, mate, the one statement that I thought was quite interesting there, or what was I think it might be the last paragraph. I think it's the third issue. Is that what it is? Or maybe it's the second issue, is the positive effect of the paragraph that mentioned other economies, and seemed to state that other economies have reacted. Yeah, they other economies seem to have put policy in place, and that last paragraph to me sounded like Australia's feeling a bit left behind, the Aussies feeling a bit left behind, and something might need to be done to rebalance the order of what other countries have done in comparison to the likes of the Aussie, because the Swiss National Bank said exactly the same thing. The likes of the UK, the EU, and the US all lowering interest rates and really, having a purchasing program does put other countries on a bit of um, a difficult situation. They put them in a difficult situation because there's now an imbalance where there was balance before, where those countries would have been. That the Aussie could have been competitive just because of its currency, being slightly less slightly worse value in some respect, relatively speaking, than these other countries. But now those other countries have reacted, and the Aussie hasn't, and the Aussie has been on a bit of a run to the upside. So I can see why they would potentially need to do something, but the fact that they're intimating it would suggest that there could be a reason for this move to the downside. I think longer term, you're absolutely right there. They haven't done anything yet. They're just sort of saying it's a bit of a risk in a way. It's a bit of a headwind for the Australian economy. And until that does actually get announced, I would suspect the Aussie, from a longer term play, would be much better to look for longs than shorts. But I can see why there might be a reaction today, but particularly today, with global equities going in the direction that they're going in, and the Aussie, as we know, being a more expansive currency, it does tend to reflect expansion in worldwide economy. So, if the worldwide economy is shrinking and then it's playing into the stock market with these unemployment levels shooting to the upside, with coronavirus not being abated, and potentially further lockdowns coming in, and possibly back to where we were in March, then it makes sense that the Aussie would weaken here, if there is a bit of a hint of a statement coming from Philip Lowe like that. But I do agree with you that they haven't done it yet, and until they do, the Aussie isn't really a selling opportunity on the longer term.
I don't believe so.
Yeah.
Coronavirus is under control, apart from one state.
Yeah.
Where it's got an issue.
Yeah.
Commodities are a bit iffy, in particular in relation to China. There's no question there.
Yeah.
Because of that little fracas or interesting scenario that they've got going on with China.
Yeah.
But as a road to recovery out of the economic situation that the global economy is in, I don't see that there's too many countries better placed than Australia to come out of this very, very quickly.
No, I agree, and I suppose that the other thing that Philip Lowe seemed to point to there was the fact that we are in that it's an open economy, isn't it? Which means that it is very highly exposed to the rest of the world. So it is important for the likes of Australia. I don't know whether it's the same for New Zealand, which would be interesting, because maybe New Zealand maybe the Kiwi is a better play to the upside, because it isn't quite as exposed to the outside world, to my knowledge. But the Aussie
well, it is as far as tourism is concerned.
Okay, so yeah, okay, so
I'm not sure what percentage of GDP tourism is, but it's a big deal.
Okay. What about the China numbers today as well? Because the last thing that the Aussie dollar needs right now.
It
won't help. Yeah. I mean, we didn't have particularly good CPI numbers. I mean, one CPI print isn't a disaster, and we shouldn't take it as such. But I think the problem is that in the last 24 hours, we've just had a stacking of information which all suggested downside, and we haven't had anything as yet to temper that particular mood. So because the mood has been lockdowns being re-announced, and markets, unemployment increasing, unemployment will having to increase as well, a lack of inflation, and China numbers not too good, a lack of progress on a stimulus package, no real sort of thing about Brexit, which I'm sure isn't going to affect the Aussie, but it's just a slew of things that over the last 24 hours that have been all fairly negative, or benign, and
which is why we're now in a risk-off situation.
Which is why we're in a risk-off situation. Yeah, I mean, it's a big question when it turns, isn't it? But considering that we are looking at a daily chart here, it would suggest that we probably need at least to get through the week before we're looking to buy anything. When it comes down to anything, that you're ready to go, are you?
Yeah, I'm ready to go.
Are you ready to go today?
Oh shit, yes.
Okay.
Bring it on.
I mean, I suppose it does depend on your time frame parameter as well. I mean, I've got some risk on things in the market, mate. I've got Cardano still. I've got a footsie trade. I've got Aston Martin. All of them are going in the wrong direction right now. But I'm not. In fact, no. Ada's doing okay. Cardano is actually the one that's holding up, which is managing to somehow, considering it is probably considered another risk on products, it's somehow hedging out some of the losses on the other two. So I'm holding on to my risk on positions right now. And I'm hoping to add to them if it comes a bit further down, because I do see this as a buying opportunity still.
Cool. Those who traded the breakout trade, I have now got my stops at 129.39, I think it is. Yes. Likely to be taken out shortly, I would imagine, but that's a reasonable return today on the breakout trade, which is welcome, I've got to say.
Yeah, a big boost in the VIX today as well. Now, has the VIX popped up high enough? It's getting close. The VIX is getting to a fairly dangerous level right now, where we'd have to start assuming that a risk-on environment is going to be way too dangerous to be adding to at this stage. So looks like volatility is maybe picking up now. It's
No
always a
surprise,
question.
I guess.
No,
was a bit flat.
It was flat, yeah, and you're right, mate. It is no surprise. I think the big question really for the likes of the VIX is how long is it here for? How long is this volatility here for? Because
I think you'll probably see it for a while through this Brexit closing, through the elections.
yeah,
I think we're probably here for a few weeks yet.
yeah. I mean, it's still a little way off before we need to be too concerned about the stock market, but things are undoubtedly changing hands at this particular stage. So if there are any opportunities to go short, maybe now's the time. Not today, but maybe we're about to enter a period where stock markets just struggle a little bit. I'm just checking the most recent news now, and what have we got breaking? London goes into a stricter lockdown from midnight on Friday. Now this could be interesting. Oxford scientists develop a 5-minute COVID-19 antigen test. Oh, that's quite amazing, mate. I'll tell you what, that's the kind of thing that the airline industry needs. I'm going to show you this. I mean, it's something that this is the kind of thing that makes me think, okay, well, maybe it's time to take a bit of risk on some airline stocks again. I'll be more than happy to get back into my EasyJet shares. There we go. Scientists from Britain have developed a rapid COVID-19 test available to identify the coronavirus in less than 5 minutes, researchers said on Thursday, adding it could be used in mass testing at airports and at businesses. The university said it hoped to start product development in testing device in early 2021 and have an approved device available 6 months after. Of course, still a way off, isn't it? The device is able to detect the coronavirus and distinguish it from other viruses with high accuracy, the researchers said in a preprint study. Our method quickly detects detects intact virus particles, said Professor. Oh, what a name! Anchiles Kapanidis.
Wouldn't be Greek by any chance.
Oxford Department of Physics adding that this meant that the test would be simple, extremely rapid, and cost-effective. Rapid antigen tests are seen as a key in rolling out mass testing and reopening the economy while the coronavirus is still circulating, and those that are already in use are faster and cheaper but less accurate than the existing molecular PCR tests. So it looks pretty good, mate. Siemens Healthcare on Wednesday announced the launch of the rapid antigen. Although the Oxford platform will be ready next year, the test could help manage the pandemic in time for next winter. Still a way off, mate. I mean, I'll tell you what, things could get extremely broken by the time that this stuff gets to market. A scientific concern for the upcoming winter months is unpredictable effects of co-circulation with other seasonal respiratory viruses. We have shown that our SA, yeah, I mean it's tricky. Do you know? I'm going to look at shares in Oxford
Mm-hmm.
Biotech, I think they're called, and the reason that I'm going to check those guys out is not just because of this story, but they are in development with AstraZeneca for an actual vaccine, and I believe they're in phase 3 in this country. So they could be an interesting possibility. Oxford Biomedica. I'm presuming that's the same thing. Yeah, their shares are quite nicely down at the minute, so could be a buying opportunity in those guys in a little while's time. Let's just see if they're on Trading View. And go to the chart here. So we are looking at ticker OXB. No, it's not. Oh, it's not in futures stock. Here we go. Yeah. What are you laughing at?
Dennis's comment.
Oh, okay.
Good on you,
Yeah.
Dennis.
Yeah. Could be. Yeah, looks like around about the six, maybe the let's just see what the price is on that. £7 level would look pretty good, I think, for Oxford Biotech. So that looks like it's got a little while to go as well, mate. But as I say, I think this creates a buying opportunity, and this is the thing, when there's all this fear in the market and everybody wants to sell everything, which is right. If you're managing to get in a short, then I'd completely concur. But if you're not in the short, then what's the other side of the play? And the other side of the play is to go, well, okay, we can't get in the short anymore. We're a bit late, but are there things that we can pick up to the upside? Because we might have missed the opportunity earlier in the year. You can see what happened to Oxford Biotech down from the lows. It's still up 116%. I mean, that's just a crazy number. And that's with it coming down today, but from the closing price, it's up 50%. And it did hit a high of 78%. So I think Oxford Biotech has got some way to travel. So I'm really interested in this one, mate. I'm actually going to be waiting on this one, and I might shove EasyJet to the back of the queue just for right now. But if they can get this sorted, then
Is that
then
the same as the FARQ?
Not the same as FARQ. Maybe I will say FARQ to EasyJet just for right now, and start looking for Oxford Biomedica instead. Now I have to make sure that they are the same people that are being reported here. But this means we are out in front if we can get this sort this kind of thing. Now, scientists from Britain's University of Oxford. Now I don't know whether that's the same people. I don't know whether that's the same people, but it might be. I'm going to look into it and just see if that's a different arm. Yeah.
Euro Kiwi. Wow. I had that pegged as a sell this week. Euro Kiwi. Sorry, I'm talking to myself here, I think. Just going through a few charts.
No problem, mate.
I've got to get into pound Kiwi, mate.
Yep.
But
okay.
I just cannot find a way. I can't.
Oh, you still want to go long that, right?
Yeah, I do. Yeah. But it's not giving me anything. And SF, yes, CAD Swiss just hit stop loss, agreed. Actually, it did a while back for me, I think. Not much I can do about that, I'm afraid. No. SH12 happens, as I said before. I guess all we can do is balance it out with the ones that are going well. Like the pound breakout trade is going well today. Euro pounds hanging in there. Euro CAD, I've tightened up my stops on Euro CAD, I think, haven't I? Yeah, stops are a little bit tighter on that. Euro pound. Look, I'm really confident that that's going to be okay. We have taken profit on that, have we not? Yes, of course we have. So that's all. Everything looks okay, but then everything looked a whole lot better a couple of days ago as well.
Yeah. Yeah, tricky one, isn't it, mate?
LT, you've closed everything.
I mean, I don't think that's the worst play in the world either. Just to kind of like wait until things calm down a bit.
Dennis, you're in Euro Yen, buddy. Awesome. I don't see any reason to change a thing. I've got 122.40 or something like that, I think. Maybe 122.60, maybe. I reckon I'd be comfortable to there if I was in, but I'm not in. So that's the one sad part for me today, this week actually. That was my number one play of the week, and I missed it.
Well, we must shoot off now, mate. Anyway, it's time for us to bid everybody bon bouche.
Yeah, that too.
And go over to the US show. Let me line up a track.
All right, guys. Those of you who are not in the US session proper, then thank you very much indeed for your company during the week. Have a great weekend. Catch you on Monday.
Yeah, see you soon, guys. Thanks so much for popping in. We will be shooting over to the US show now, and
Aussie.
Yes, we'll look at the Aussie, but we'll also just update the journal as well and see what kind of week everybody's having.
There.
Yeah, we'll get all that done, and I've got an extra edition as well, so cool. I'm getting caught slightly on the hop with tracks at the minute, so I'm deciding tracks on the fly.